Welcome, everyone. We're diving into the latest earnings call from VolitionRx Limited today.
That's right. Our mission is really to unpack this quarter's update.
Yeah, cut through the noise and figure out what it all means for where the company's actually heading.
We'll kick off with the headline numbers, the financials.
And then we'll get into the nitty-gritty. The core tech, progress across their main business areas, their pillars.
There were some pretty significant milestones announced and maybe some strategic shifts too.
Okay, let's jump right in. The results snapshot. Management mentioned a tough environment, but the numbers.
Well, yeah, despite that macro context, they showed some real positive movement, a clear focus on efficiency.
Okay, so the big target, the one they keep mentioning for 2025, is hitting cash neutrality for the full year.
Absolutely. That's the headline goal. And they made a significant progress towards it this quarter.
How so?
Well, total operating expenses were down sharply, like 35% lower than Q1 of 2024.
Wow, 35%. That's substantial. Broad cuts then.
Yeah, it seems like it's across the board, and that flows right down to the cash burn.
Right, the net cash used in operations.
Exactly. That number was $4.3 million for the quarter. Compare that to $8.3 million in Q1 last year.
So nearly halved.
Yeah.
A 48% reduction.
Yeah. For a company like this, at this stage, managing that burn is just critical.
Especially now.
Makes sense. And revenue. Still small numbers, but trending up.
They did see growth. Almost $250,000 in revenue for Q1.
Why is it?
44% growth over Q1 2024. But here's the really interesting bit.
Go on.
That figure included the very first revenue from sales of their human product.
Okay. So it's not just growth, it's a signal. Moving into that regulated human market. That's key.
Definitely a key milestone.
And their cash position at the end of March.
They finished the quarter with about $2.6 million in cash and equivalents.
And they brought more in during the quarter too, right?
Uh-huh. $2.3 million from a direct offering, $1.6 million from non-dilutive loan financing, which is important.
Meaning no shareholder dilution from that loan? Right. And another $0.2 million in grants.
Plus, a significant chunk came in right after quarter end.
Yes. They finalized a convertible loan note. That brought in $6.25 million gross.
So, putting it all together, the cost cuts, the lower burn, these funding injections, they're working hard on that runway.
Looks like it. All pointing towards trying to hit that full-year cash flow neutral target. The indicators are trending positively, at least for now.
Okay, so those are the vital signs. Let's get underneath the core technology, the NUK platform. That's central to everything, isn't it?
It really is the engine. Basically, it measures chromatin fragments floating around in your blood.
These tiny bits of DNA and protein released by cells.
Exactly. They call them nucleosomes. Measuring these specific fragments gives unique biological insights, like molecular fingerprints, as you said.
And why is that so powerful?
Because these nucleosomes can act as biomarkers for a whole host of conditions. Management really hammered home the versatility.
Right, it underpins all their pillars.
Yes, and crucially, they mentioned they can run these assays on like half a dozen established lab platforms that their partners already use. Same core tech across the board, mostly.
Which simplifies things. And for 2025, the big push is definitely commercializing this in the human diagnostic space.
That's the main event, it seems. They're using the playbook from their veterinary success.
Which means licensing.
Okay.
Partnering up.
Primarily, yes. They're aiming for multiple deals. And the structures they want include ongoing revenue, but also potentially large milestone payments up front or on hitting targets.
Are these talks real? I mean, are they actually talking to potential partners?
They said confidential discussions are underway with over 10 companies.
Okay.
And get this, the combined market value of just 7 of those companies is over $600 billion.
Wow. Okay, so not small fish. These are potentially huge players in pharma and diagnostics.
Yeah.
That level of interest is, well, it's notable.
It certainly suggests the technology is being taken seriously at the highest levels, and the clinical evidence they're building seems to support that broad applicability claim.
Especially in those big areas they mentioned, cancer and sepsis.
Right. They threw out a combined total addressable market estimate for just those two, around $25 billion annually.
Huge potential market if they can crack it through these partnerships.
Exactly.
Okay, let's dig into the pillars. Pillar 1, cancer. What's the latest progress there?
Commercially, they flagged real movement. 2 major companies are in active negotiations and evaluating the NUK tech, plus another one called CaptureSec.
And when might we hear about those evaluations?
Results expected next quarter, so quite soon. That's definitely something to watch.
Okay, near-term catalyst potentially.
Yeah.
What about their big lung cancer screening study, the one in Taiwan?
Yeah, that pivotal study is enrolling fast. Over 100 patients are in already.
And they're planning to show some early data.
An interim analysis is planned for the European Society of Medical Oncology Congress, ESMO, in October.
Why is that Taiwan study so critical?
Well, if the results are positive, it could open doors for the NUK test to be included in national lung cancer screening programs.
Like where?
They mentioned Taiwan, obviously, but also the US, UK, France. That's potentially over $1 billion market.
And
Importantly, they think in some places it could be rolled out relatively fast as a lab-developed test, an LDT.
meaning potentially skipping some longer, more complex regulatory hurdles.
That seems to be the hope, yeah. A faster path to market in certain key regions.
Okay, significant potential there.
Yeah.
Let's shift to Pillar 2, NUK nets. This one has a couple of angles, right?
It does. First prong is licensing. Again, similar strategy. Discussions are going well, they said, and several potential partners have already got the tech working on their own platforms.
And the clinical evidence is strong here too, particularly for sepsis.
Yeah, extensive evidence for sepsis. And before we go further, maybe we should quickly explain NETs.
Good idea. What are nets?
Okay, so NETs stands for neutrophil extracellular traps. Neutrophils are immune cells. When they get activated, sometimes they basically spew out these web-like structures made of DNA and proteins.
To trap bugs, presumably.
That's the idea. But if this process, called netosis, goes wild, it's linked to serious problems. Sepsis, blood clots, autoimmune diseases, you name it. Volition's tech measures markers related to this netosis process.
So measuring nets could help monitor these critical conditions. What's the market potential here?
Just for the intensive care, patient testing, and monitoring piece, maybe around $1 billion a year. But the total addressable market could be over $10 billion as more uses get validated.
Okay, that's the licensing prong. What's the second one?
The second prong leverages their CE mark in Europe.
Right, they got regulatory approval there.
Yes, for using the NUK NETs assay for netosis-related diseases in the EU. It runs on a specific automated analyzer, the IDS-i10.
And this links back to that first human revenue you mentioned earlier.
Exactly. That revenue reported in Q1. It included the very first sales of the specific CE-marked human diagnostic product in Europe.
A big step. Moving beyond research tools and vet into regulated human clinical use.
Absolutely. And uptake seems to be starting.
How so?
They reported 9 hospital networks across 5 different European countries have placed orders. They're assessing its clinical utility now.
Trying to see where it fits into routine care.
That's the goal. And they're talking to another 12 hospital networks, expecting at least 9 more evaluations to kick off later this year.
The range of potential uses sounds huge.
It really is. They listed coagulation issues, heart problems, kidney disease, trauma, burns, autoimmune stuff, organ transplants, even pregnancy management, plus sepsis, of course.
So a clear unmet need is driving that interest.
That's what they emphasized. Their ambition is pretty bold. They want to be the NETs company worldwide through these partnerships and direct European sales.
And they expect routine clinical use to start soon.
They're aiming for routine patient use in the EU next year, with global expansion following via licensing deals.
Okay, on to Pillar 3, NUK vet. This is their established beachhead, right? Canine cancer test.
Yep. The focus now is expanding globally with partners like Ant, part of Mars Fujifilm Vet Systems, IDX, and a key part of that is automating the central labs.
Why is automation so critical for the vet side?
It speeds things up massively, better turnaround times, higher throughput. That accelerates revenue and makes it easier to get included in things like annual pet wellness panels.
Makes sense. Faster results, happier vets, more tests run.
Pretty much. And Fujifilm actually extended their contract specifically to get this automated platform running using that same IDS-i10 analyzer.
There's that synergy again. Same machine for human nets and vet cancer tests.
Exactly. Shows the platform's adaptability. They also mentioned the feline cancer test.
How's the cat test coming along?
Progressing well, they said. The tricky pre-analytics part, handling cat samples properly, is done and accepted for publication. Now they're moving to gather the clinical data.
And that would trigger another payment.
Yes. It's their 3rd species, and they expect a milestone payment once it's completed.
Okay, last pillar. Pillar 4, NUK Discover. This sounds more research-focused. Pharma partnerships.
That's right. Same core nucleosome tech, but packaged as epigenetic profiling assays for drug developers and scientists.
Quick reminder. Epigenetic profiling. Pharmacogenetics.
Sure, epigenetics is like the control system for your DNA switches that turn genes on or off. Profiling means measuring those switches. Pharmacogenetics looks at how your genes, and maybe these epigenetic switches, affect how you respond to drugs. NUK Discover provides tools to study this.
Got it. So they sell kits and services to researchers and drug companies.
Yep. Research use-only kits, sometimes via a distributor, plus services like sample processing or high-throughput screening. Companies use these assays in trials sometimes.
Surrogate endpoints or pharmacodynamic markers, what are those again?
Right. A surrogate endpoint is like an indirect sign that a drug might be working. A pharmacodynamic marker measures the drug's actual effect on the body. Using NUK Discover helps pharma see if their experimental drug is doing what they expect biologically.
And they landed a big one here this quarter.
A really significant one. Their first human clinical study sponsored directly by a major pharma company.
Using NUK Discover biomarkers.
Exactly. In a phase 12B trial, tracking disease progression and treatment response over time for an experimental drug.
That's huge validation for the platform in actual drug development.
Yeah.
What about the money side of that deal?
Expected to generate significant revenue, but it's spread over the trial's length, up to 2 years. They couldn't name names or numbers due to confidentiality, but they stressed it was a very meaningful amount from a very large partner whose goals align with theirs, so a major partnership.
Any other firsts for NUK Discover?
Yes, first commercial sale of their synthetic sepsis model. It's a tool for testing potential sepsis drugs by measuring NETs activation in real time.
And others are interested in that model too.
Discussions ongoing with 5 other companies, plus they have over 10 repeat customers for their kits and services. The goal here is to at least double revenue in this pillar in 2025.
Okay, so let's tie this all together. The financials, the tech, these 4 pillars. What's the big strategic picture?
The number one goal is commercialization, specifically getting multiple licensing deals signed in the human space. They're explicitly using the VET strategy as their model.
And that VET strategy brought in what? $23 million in milestones plus ongoing revenue.
That's the figure they quoted. So they want to replicate that kind of structure, large milestone payments from some human deals, plus ongoing revenue from all of them.
And the interest is there.
They reported strong and broad interest, active commercial talks with large companies for both NETs and oncology, plus talks with national lung screening bodies.
Management sounded pretty bullish about the near future.
Yeah, they used the phrase hugely exciting for the next few quarters. They clearly believe they have a low-cost, robust, reproducible platform technology hitting major unmet needs.
And the priority is just getting it out there.
Rapid and effective commercialization worldwide, that's the mission. The strategy involves that non-dilutive funding they secured, ramping revenue, cutting costs.
Which they did significantly this quarter.
Exactly. And then signing those big commercial deals, they see those human deals as the final piece of the puzzle.
Did the Q&A add much more color? Like, can they keep those costs down?
Yeah, they were asked that directly. Management said, yes, the lower spending is sustainable. It's a focus for the rest of 2025. They aim to keep costs below last year.
And the licensing model helps with that.
Big time. Partners handle a lot of the expensive lab work, regulatory stuff. It allows for a leaner operation. They said they're always looking for more efficiencies, though.
What about things like conference spending, marketing?
It might fluctuate quarter to quarter, but the overall budget for the year is planned to be lower. They're being strategic, focusing on meetings and networking, not necessarily big, flashy booths.
And the feline test? Still on track.
Sounds like steady progress. Pre-analytics done and accepted for publication, now collecting clinical data. Methodical steps towards that milestone payment.
And that big pharma study revenue. Any more detail?
Just confirmation it's a longer study, revenue spread out, first samples expected in Q2 of this current quarter, and reiteration that it's very meaningful money from a very large partner, even if they can't name names yet.
Okay, let's take a step back, put on our investor hats for a moment. What we're seeing is a company making tangible progress operationally.
Yeah, and showing real financial discipline this quarter. Those cost cuts, the burn reduction that's responding to the market, maybe shareholder feedback, it shows commitment to being capital efficient.
Which is vital right now. And the licensing model itself supports that lean structure.
Absolutely.
And the core technology, NUK,
yeah,
it's just showing up everywhere. Dog cancer, human sepsis, pharma R&D.
That breadth is pretty striking, isn't it? It really highlights the platform's potential versatility and scale, assuming they can execute on the commercial side across all these different high-value markets.
That first revenue from the regulated human product in Europe. Feels like crossing a threshold.
It really does. It's a clear signal they're moving beyond R&D and vet into the mainstream human clinical space. And the fact that 9 hospital networks are already evaluating it suggests real-world interest.
And those licensing talks, hinting at the scale of potential partners.
Those are the potential game changers, right? A deal with one of those $600 billion plus market cap giants could rapidly accelerate everything: adoption, revenue, validation, potentially replicating or even exceeding the vet success.
Plus, getting their biomarkers into a pharma-sponsored trial. Another layer of validation.
Confirms the NUK Discover platform has real utility in drug development in that whole pharmacogenetics space. It opens up another revenue stream and fits that precision therapy vision.
So strategy seems locked in. Sign deals, grow revenue, keep costs tight, secure funding, all driving towards cash neutrality and cracking the human market.
That's the narrative they presented. And this quarter showed progress, especially on costs and that initial human revenue step.
Okay, team, time for our This Is Not Financial Advice segment. Let's pitch something. We've got VolitionRx, versatile tech, validated in animals, now breaking into human diagnostics and pharma trials.
They've slashed costs, raised some non-dilutive cash, but yeah, the runway still depends heavily on bringing in more money, likely from deals.
And management is explicitly targeting multiple human licensing deals. They want those large milestone payments, like the $23 million they got in vet deals, plus recurring revenue.
They're talking to 10 plus companies, some huge. 2 are in active negotiation right now, with tech evaluation results due next quarter. And remember, those potential market sizes, billion plus for lung screening, maybe 10 billion plus for net sepsis.
So, the outrageous but plausible trade idea. Focus laser sharp on that near-term catalyst. A highly concentrated bet on the announcement of the first big human licensing deal.
How would you structure that?
Maybe deep in the money, short-dated call options. Set the expiry for just after those tech results are due next quarter. You're trying to capture the pop if a deal announcement follows fast.
Okay, where's the plausibility?
It comes directly from management's own words. Large milestone payments, talks with very large companies, the specific timeline for tech results next quarter, the massive GAMs. You're essentially betting they execute on exactly what they said they're trying to do very soon.
And the outrageous part.
Extreme concentration. Betting the farm on one binary event in the near future. Using options adds leverage, magnifying potential gains and losses massively. The core thesis is the market hasn't priced in the potential immediate cash boost from a big milestone or the validation from a major partnership. An announcement could cause a rapid, significant re-rating.
But the risks are glaringly obvious.
Absolutely. No deal happens. The deal terms are disappointing. The announcement gets delayed past your option expiry. Poof, investment gone.
So let's be crystal clear. This is purely hypothetical for discussion, not financial advice. Extremely high risk.
Do not try this at home unless you really know what you're doing and can afford to lose everything. Seriously. Okay.
Right. So wrapping up our deep dive on VolitionRx Limited, we've covered the financials, the NUK platform, the 4 pillars, the strategy.
Yeah, from those big cost cuts and the move towards cash neutrality to that first human revenue and the progress on licensing talks and clinical studies, there's definitely a lot going on.
The next few quarters look pivotal. Can they convert these talks and evaluations into signed human deals? Management sees that as the final step.
And just to reiterate, this has been our exploration of the information the company provided. It's not an endorsement, not a recommendation, definitely not financial advice.
As a final thought, maybe reflect on that core technology again. The fact that the same basic measurement these nucleosomes could potentially apply to pet checkups, human cancer, critical care sepsis, and guiding precision drug development.
Yeah, what does that unique adaptability imply about the technology itself, its potential, assuming they can navigate the commercial hurdles ahead? Something to ponder.
Indeed.
Thanks for joining us for this deep dive. We appreciate you being with us.